you as a retail investor should be considering mutual fund, PMS or AIF. Now, having a portfolio where you can strategize all these kind of investment options, let's decode this. I have with me Arnav Pandya, founder, Moneyeduschool. Arnav, good evening and welcome to the show. You know, with the way we've seen the markets going up in the last 2 to 3 years, a lot of interest in PMS and AIF investing has, caught up among investors. We've also seen SEBI coming up with a special category which can be a mix of mutual fund and PMS, so that retail investors can also participate and take the benefit of PMS investing. But then just to decode PMS investing and AIF investing, how exactly would you explain it to our viewers, in a very layman language?
Good evening, Kavita. So when you look at the investment basket which is there, you start off with mutual funds, which is where the investment amount is very small. Then as you go on up the investment ladder, you have a portfolio management service where the minimum investment comes to rupees 50 lakhs. So this is meant for investors who have a higher corpus, who are slightly high net worth in their ability to invest. And here the fund manager will have a strategy which is unique for the investors and they will manage the portfolio for you. Going a step further, you have the alternative investment funds, and these are in India based into three categories, where you have category 1, 2, and 3. The traditional investment which is comparable to an AIF is the category 3 funds, where you have various fund managers using different kinds of strategies through what is normally known as hedge funds, or you have those funds which are investing in public equity, which are also known as type funds. Along with these, there are other funds in the category 1 and 2, where you have early stage investing, you have private capital, you have debt funds, you have real estate funds. But the AIF investment minimum amount is 1 crore. So this is for an investor who has a higher capital and who has a better ability to digest these kind of different kinds of strategies which are adopted by the fund manager for their particular investment. So these are the three main categories, and SEBI has also proposed a new category which is going to be between a mutual fund and a PMS, where the minimum amount would be 10 lakh rupees. And here the funds will be able to use derivatives and use various kinds of strategies in order to enable investors to take an exposure to this route at a slightly lower cost. Exact details and exact guidelines for this category are not out yet, but it's going to be between the mutual fund and the PMS segment.
So if an investor needs to carve out a strategy, where they can have mutual fund, PMS and AIF, what would you like to recommend in terms of, the stages where they can include these kind of investment options, or you would just advise them to, stay out of it, just focus on mutual fund because it's easier to understand, and also the capital required for the initial investment is also less as compared to PMS and AIF. It's more suitable for retail investors. What would you advise?
So retail investors, if you have a small amount, then the mutual fund is the most ideal route for you, not only to start off with, but also continue along the way. The question then is that just because you have a higher amount, should you go to a PMS or an AIF? The real thing is that what is the PMS or the AIF bringing on the table for you in terms of a strategy? So if you have a very large portfolio, or you are an investor who has this kind of requirement in terms of the ability to use a different kind of strategy for a certain part of your portfolio, and you use an AIF or a PMS for it, that is a different matter. But as long as your requirements are easy, simple, then you can stick to a mutual fund. And while all the strategies obviously of the AIF cannot be replicated by the mutual fund, for a layman and for a basic investors, when you have to allocate across asset classes, you have to geographically diversify and all those things are taken care of by the mutual fund. So what my point is that just because you have a higher amount, there is no need to look at other instruments. Only if the strategy is relevant for you, should you go there.
What can be the risk that one needs to factor in before applying for a PMS or, getting in for an AIF investment?
So the risk there is that the strategy which has been adopted doesn't work, or it doesn't work as intended. So the risk of losing capital is always there. Two is also the fact that in when you try and adopt these kind of strategies, it could be quite some time in before you actually see some returns coming in, and you have to be patient with that because the strategy also works along with the market conditions. So it's not necessary that every time the market conditions are favorable for the investor. That is the risk. And the other risk that always remains is that if the investor is not able to stay with these kind of investments and have a time horizon which plays out the various strategies, then the early exit can also become a problem for the investor in terms of the final returns that they earn.
All right, my time is up, although I do have a lot of other questions for this particular topic, but then we are running short on time today. Thank you so much, Arnav, for being on the show and helping our viewers with the understanding of how to strategize PF, AIF, PMS, and mutual funds in their portfolio. And it's time to slip into a quick break, but then post that, let's connect with our viewers and talk about their financial portfolio and get the queries sorted basically. I'll be joined by Pankaj Matpal after this break.